Ever wonder how the rich pay less in taxes than most middle-class workers? Legally? In this video, I'll show you 5 powerful tax strategies wealthy people use to protect and grow their money, and how you can apply them too, whether you're in the US, Canada, or anywhere else. 1. Real estate depreciation. Rich people love real estate not just for rental income but for tax breaks. In the US, the Internal Revenue Service, IRS, allows investors to depreciate residential real estate over 27.5 years. This means they can deduct a portion of the property's value from their taxable income each year. In Canada, while depreciation, called Capital Cost Allowance or CCA, works differently, real estate investors can still reduce their taxable income using similar methods. Globally, many countries offer property-related tax deductions. Always check your local laws. Example: buy a $300,000 property in the US and depreciate it over 27.5 years. That's over $10,000 in deductions per year. 2. Starting an LLC or S-Corp. Wealthy individuals often structure their businesses under legal entities like LLCs, limited liability companies, or S-Corps, S-corporations. These business structures allow them to write off operational expenses, from laptops and marketing to business travel, and even portions of their rent if working from home. Bonus: in the US, an S-Corp allows income to be split between salary, subject to payroll taxes, and distributions, which are not, reducing self-employment taxes. In Canada, similar benefits can be accessed through corporations, where business owners can deduct eligible expenses and pay themselves in dividends. International tip: many countries have small business or sole proprietorship structures that offer similar tax deductions. Consult a local tax advisor. 3. Capital gains versus earned income. There's a big difference between how earned income from a job and capital gains from investments are taxed. Earned income can be taxed as high as 35% in the US or more in other countries. Capital gains, profits from selling stocks, real estate, or businesses, are often taxed at much lower rates. In the US, long-term capital gains, on assets held over 1 year, are taxed between 0% to 20%. In Canada, only 50% of capital gains are taxable, and those are taxed at your marginal tax rate. That's why wealthy individuals prefer growing their wealth through investments, not salaries. 4. Borrowing against assets. Instead of selling stocks or property and triggering taxes, rich people borrow against the value of those assets. This gives them access to cash without creating a taxable event. They use this borrowed money for personal spending, real estate deals, or reinvesting. In the US and Canada, this is known as a securities-backed line of credit, SBLOC, offered by banks and brokerage firms. Example: Elon Musk reportedly funds his lifestyle this way, borrowing against Tesla stock instead of selling it. Why it works: loans aren't considered income, so they're not taxed, and the original investment can keep growing. Tip for others: you can access similar lines of credit through brokers like Charles Schwab, US, or Questrade, Canada, but it's only advisable if you understand the risks. 5. Donating to charities and foundations. Wealthy people often donate to reduce their tax bill, especially near the end of the year. In the US, charitable donations to qualified 501(c)(3) nonprofits can be written off from taxable income. In Canada, registered charities allow for a non-refundable tax credit of up to 75% of net income. Some rich individuals even create their own private foundations, allowing them to retain control over the funds while still benefiting from tax deductions. Example: donating $50,000 to a registered nonprofit can reduce a wealthy person's taxable income by the same amount, while also supporting a cause they care about. Pro tip: websites like Charity Navigator US and Canada helps.org help you find legitimate registered charities. Tax law favors the informed, and now you know what the wealthy know. Whether you live in the US, Canada, or abroad, some of these strategies can help you reduce your tax burden and grow your wealth. Which of these strategies surprised you the most? Comment below, and don't forget to like and subscribe to BloomBanked for more financial secrets the rich don't want you to know.